Now, when an individual or a company wants to buy insurance, they'll usually appoint a broker. If the insurance is to be placed in the London market, then they're going to need the services of an accredited Lloyd's broker. Brokers should operate at all times in the best interests of the client. And they're paid either by way of brokerage, which will be a percentage of the premium, or by way of a set fee, which is agreed in advance for placing the business. So let's now meet our hypothetical firm of brokers, Bowling & Barkers Limited. They're a medium-sized firm in the city with a wide cross-section of business. We're going to be meeting the team who specialise in placing property insurance. Andrew is the broker. He's been with the firm for 2 years and is keen to get on. Robert is the senior broker and supervises the team. Jules is a technician who's been with the firm 1 year. Sally is the long-suffering team secretary who tries to keep them all in order. And finally, we'll meet Piers, a Lloyd's underwriter, and the client, Sir Lionel Bingham-Jones, who's looking to renew the insurance of his business, LBJ Storage. So let's have a look at how things should proceed. Andrew, the broker, needs to find out as much as possible about the business so that when he comes to place the risk, he can answer any questions that the underwriter might have. Andrew will also need to comply with FSA regulations that require him to provide information to the client about the scope of the service Bowling & Barkers is offering before the policy is concluded. In addition, as this is a commercial client, Andrew is going to need to provide a statement of demands and needs and sufficient information about the insurance to enable the client to decide whether to buy the insurance before concluding the policy. Now, we'll see the impact of these regulations later on, although we won't be examining them in detail on this CD. So once our broker has gathered together all the relevant information, he should create a document containing details of the risk. This is known as a slip. He'll then approach an underwriter who insures this type of risk. Now, in our scenario, he goes first to Piers, who's insured LBJ Storage in the past through the client's previous brokers. Andrew should then present the slip to Piers and explain LBJ's insurance requirements. Once Piers is satisfied that the risk represents good business for him, he should indicate his willingness to accept it by signing a line. Piers should also apply his syndicate's stamp and initial the slip. He should also indicate the proportion of the risk that he's prepared to accept. An underwriter might agree to take on 100% of the risk. However, in some cases, it might be a lesser percentage, and in that case, the underwriter would be the lead underwriter. The broker would then have to negotiate with other underwriters, persuading them to accept parts of the risk at the same rate and conditions as set by the leader until 100% of the risk is placed. If the client does need to make a claim, once the value of the claim has been agreed with the underwriters, the claim proceeds to be paid through his broker. Well, that all sounds fairly straightforward, doesn't it? But, as we heard earlier, mistakes can be made at every stage of the process. This CD looks at what happens when Bowling & Barkers take over and renew LBJ's insurance of his business. And to aid your learning process, we've split the CD into sections so that you can see clearly how errors and omissions are made at the different stages in the broking process. The sections are the client meeting, placing the risk, and administration. Each section contains a little drama to set the scene, an assessment to test whether you've spotted the mistakes, and a final dramatic sequence to show what happens when they get it wrong. There are also notes and other materials to support your learning.